Hello everyone, welcome back to the channel. Today we are going to talk about one of the biggest economic shocks that has recently hit Russia, a massive $5 billion disappearing overnight, and what many analysts are calling Putin's energy nightmare. This crisis isn't just about numbers on a screen, it represents a deep structural issue inside Russia's powerful energy empire, and it might just change the balance of global energy for years to come. The story begins with a nation that for decades relied on oil and gas as the foundation of its power. Russia's energy industry was once the pride of its economy, accounting for nearly half of all government revenue and serving as the backbone of its geopolitical strength. But now the picture is starting to crack, and what we're seeing behind the surface reveals a system struggling to hold itself together. From the outside, everything still looks impressive. Russia has long presented itself as an energy giant with vast oil fields stretching across Siberia, massive pipelines delivering gas across continents, and tankers loaded with crude leaving its ports day and night. For years, these exports flowed smoothly, filling Moscow's reserves with billions of dollars. But as sanctions tightened and markets began turning away, the strong exterior image of dominance began to fade. What once looked like an indestructible fortress of oil and gas is now a structure riddled with weaknesses. International restrictions have frozen assets, limited exports, and isolated Russian companies from global technology and investment. The result has been devastating. In a single night, Russia reportedly lost $5 billion from a combination of currency, drops, oil price fluctuations, and a sharp fall in demand. The image of stability that Putin's government worked so hard to project is beginning to crumble as cracks appear across every corner of the energy sector. Inside the system, things are even more chaotic. The energy ministry is under immense pressure as revenues dry up and debts grow. Many reports suggest that oil companies are struggling to pay their workers on time, while others have started cutting production to manage costs. The government has tried to keep operations running through subsidies and state loans, but even those resources are running thin. Inside Russia's energy institutions, there is growing fear that the golden era of easy profits is gone for good. The sanctions have blocked access to essential technology, especially for drilling and refining equipment, which means that many existing facilities can't be properly maintained. The once efficient heart of Russia's economy is now filled with uncertainty, confusion, and desperation. Performance has always been the pride of Russia's energy sector. For decades it powered industries across Europe, provided fuel for millions of homes, and created enormous profits that funded the state's global ambitions. But over the past 2 years, the story has completely changed. Oil exports to Europe, which once made up the bulk of Russia's income, have collapsed by more than 70%. Gas exports have also plummeted as pipelines to Europe are either closed or running at minimal capacity. The Kremlin has tried to shift focus toward Asia, selling more oil to China and India at discounted prices, but even these efforts cannot fully replace what has been lost. The performance of the energy machine that once seemed unstoppable has slowed down dramatically. Production costs are rising, transportation routes are longer, and discounts on oil mean profits are shrinking. What used to be a symbol of unstoppable growth is now struggling just to stay afloat. Safety features that once made the energy system reliable are also breaking down. The departure of Western technology firms has left Russian companies without crucial expertise and parts needed to maintain pipelines and drilling sites. Many of these systems were originally designed with the help of foreign engineers, and without that support, repairs and maintenance have become increasingly dangerous. There have already been several small accidents in remote oil fields, and officials fear that larger industrial failures could follow. Energy safety in Russia once relied on cooperation with global firms and consistent investment, but now it's mostly based on improvisation and outdated infrastructure. The risk of environmental damage and industrial accidents is growing, and the government's ability to respond to such crises is weaker than ever. This lack of safety and stability adds another layer of vulnerability to an already crumbling system. When we look at what made Russia's energy sector unique, its strengths have now turned into weaknesses. For decades, the country's biggest selling point was reliability. European countries trusted that Russian oil and gas would always arrive no matter the political climate. That trust has been broken. The invasion of Ukraine and the resulting sanctions shattered the perception of Russia as a dependable energy supplier. Now, countries that once relied heavily on Russian energy are investing heavily in renewables and alternative sources. The same resources that once gave Russia leverage over the world are now isolating it. The Kremlin used energy as a weapon of influence, but that strategy has backfired. Nations are accelerating their independence from Russian fuel, and companies are signing long-term contracts elsewhere. What once made Russian energy powerful, its scale and reach, has become a liability as global demand shifts and reputations crumble. Price has become another symbol of this nightmare. The immediate financial hit of $5 billion was only the beginning. The ruble continues to weaken, foreign investments are fleeing, and government reserves are being drained to plug budget holes. The cost of war, combined with falling energy revenues, has created a dangerous imbalance in the economy. Inflation is rising, and the average Russian citizen is feeling the pressure. Fuel prices at home have surged despite Russia being one of the largest oil producers in the world. For ordinary people, this feels like betrayal. How can a country rich in energy resources struggle to provide affordable fuel? The real price of this crisis isn't just measured in billions of dollars. It's measured in lost jobs, declining living standards, and a growing sense of uncertainty about the future. As the crisis deepens, the Kremlin is facing a dilemma. It can either continue to rely on old strategies, hoping that global demand will shift back in its favor, or it can attempt to reform the industry and open new paths. But real reform would require transparency, cooperation, and modernization. Three things that conflict with the government's tight control. Most experts believe Russia will choose to maintain its grip rather than change direction, meaning the decline could continue for years. Without foreign partners or investment, the energy sector is unlikely to recover quickly. The world has moved on, and renewable energy is no longer a distant dream, it's becoming the new global standard. As countries invest billions into wind, solar, and hydrogen projects, Russia risks being left behind, clinging to an industry whose golden days are over. The internal political consequences are equally severe. Energy revenues have always been the financial engine behind Russia's political stability. They funded government programs, military spending, and international projects that showcased Russia's strength. With that income shrinking, the government is being forced to cut spending or print more money, both of which could create even more economic pain. Ordinary citizens are starting to notice shortages, higher prices, and fewer social benefits. The government's narrative of resilience is beginning to lose credibility as the economic reality sets in. For a system built on control and confidence, this kind of instability can be dangerous. It doesn't just threaten the economy, it threatens the very structure of power in Moscow. Around the world, other countries are watching closely. Europe is celebrating its newfound energy independence, while Asian buyers are taking advantage of Russia's desperation for deals. China and India are purchasing oil at heavily discounted prices, gaining leverage over Russia in trade negotiations. What was once a relationship of equals has become one of dependence. Russia now needs these buyers far more than they need Russia. This imbalance reflects how much power the country has lost in such a short time. Even allies are cautious, knowing that the situation could deteriorate further if sanctions tighten or production issues worsen. The collapse of $5 billion overnight may seem like a financial event, but in reality it symbolizes the unraveling of an entire system built on oil and gas dominance. It shows how fragile even the biggest energy powers can be when politics outweigh economic logic. For decades, Russia used its energy strength to influence global decisions, but now it finds itself isolated, struggling to maintain its own economy while others move forward. The irony is striking. The very resource that gave Russia power is now dragging it down. In the coming months, analysts predict continued volatility. Oil prices may fluctuate, and the ruble could face further pressure. Even if Russia manages to stabilize the immediate losses, the long-term damage is already done. International trust takes years to rebuild, and new competitors are already filling the gaps Russia has left behind. The global market is adjusting to a future where energy diversification is key and dependence on a single supplier is a risk no one wants to take again. The $5 billion loss may just be the tip of the iceberg, but it's a clear signal that the era of Russian energy dominance is fading fast. This situation also highlights a shift in global energy politics. The focus is no longer just on how much oil a country can produce, but on how adaptable and innovative its energy system can be. While Russia is trapped in an outdated model based on control and exports, other nations are racing ahead with cleaner, smarter technologies. That is the ultimate danger for Moscow, not just losing money today, but losing relevance tomorrow. Energy is no longer just about fuel, it's about the future, and right now Russia seems to be running out of both. In the end, what we're witnessing is not just an economic crisis, but the slow transformation of a nation built on oil power into one struggling to adapt. The disappearance of $5 billion overnight serves as a wake-up call for Russia and for the world. It reminds us that even the strongest empires can fall when they refuse to evolve. The external image of strength, the internal pressure, the failing performance, and the breaking safety systems all point to the same conclusion. The energy nightmare has only just begun. The question now is whether Russia can find a way out before the world moves on completely. The stakes are high, the losses are massive, and the clock is ticking.